Hi there, traders. This is Brad Gilbert with the FX Market Insight for Tuesday, the 4th of June. All right, now there's a fair bit to go through here. There's a fair bit going on, and I need to just give you the heads up where everything is. Now, coming into like the start of the Asian session, now this is going to be a pretty loose day, I would imagine. We've got the only major release that's coming out is the RBA interest rate decision. Now, the bank is pretty much, and nothing's 100%, but this interest rate cut is fully factored in, right? Everyone's just sort of been asking me questions. What's going on with the RBA? Yes, they are going to cut rates. What's going on with the Aussie? Well, on the hourly charts, it's going up, right? Which is against the overall sentiment, which you would expect coming into an interest rate cut. And that's because there's so many other events going on. But don't get confused. The Aussie and Kiwi, which have been sort of drifting lower for the last month or so, yeah, short-term hourly charts, they are going up. But overall, they have to move a big way, a long way before the trend turns to the upside, right? What we are seeing at the moment is a correction on the back of a whole bunch of crazy activity. Now, if I just come down to looking at the core market drivers, we've got all these external geopolitical events. Now, Trump is a part of most of this, and he's created a few extras. Now, obviously, Brexit, ongoing in the UK. We've got the China-US trade situation, and now the Mexico-US trade deals up in the air. China have reacted to the US, and now it's a bit of tit-for-tat sort of scenario. But what this is also doing is it's discombobulating the whole market, right? There's a lot of fear around, a lot of media who prey on the fear are sort of starting to publicise, potential cuts by the Federal Reserve now. St. Louis Fed Chairman Bullard has come out and sort of basically said we may need to cut rates with all these trade wars and inflation dropping. Now, that's just a fly-by-the-cuff sort of comment, but it does impact. And what we are seeing on the bigger scale is, if I just come back to the top, you'll start to see now the market is seriously starting to consider a US rate cut. The dollar index has sort of moved or gapped lower. We've got the safe haven trades in play, dollar yen and dollar Swiss. Now, these are all on the back of, obviously, the trade issues that are escalating. And, euro, which has been, it's been trading sideways, but under pressure, is now breaking to the top side. So, and that's where the Aussie and the Kiwi, potentially could end up. If the US dollar and the Fed starts to signal some sort of change in their plans or policy, well, then all these currencies will rally despite the fundamental outlook for these pairs being to the downside. All right. Now, one thing you have to understand with these current moves at the top, right? You're sort of looking at what's happening with the pairs. Yeah. So if this is going down, it means basically on the hourly and the daily charts, they're both broken down through support levels. Now, this is all these current moves. I'm going to show you a bunch of charts here in a minute. Are all driven by geopolitical events. If this was the actual Fed cutting rates or a central bank, doing a major shift in policy, well, then this would be a great trading opportunity. I can't see, this is all superficial, geopolitical. I can't see these moves lasting or continuing, particularly the dollar index, dollar yen and dollar Swiss, unless the whole trade issues escalate even further. That's what we need. If they don't, well, I'd say by the end of the week, these things will all be higher and we'll be scratching our head once again, wondering what the hell happened. Okay, so if I just bring you over to the charts, and this is where you can start to sort of piece it together and get some common sense around what is actually happening. Because if you looked at the hourly charts, okay, you see the Aussie here breaking to the top side, Kiwi. Now, these two markets massively short. Okay, the global market has been short Aussie and Kiwi for some time. It looks like they're going up. Well, they are on the hourlies, but I tell you, on the longer term charts, they're not. They've got a long way to go. Now, dollar yen still being the big benefactor of all these trade war issues stuff. And you can see here, just missed that one a touch. You can see here where euro has really, broke through sort of 112. Did a bit of tap dancing there, then up through 112.30. It's now sort of up in the boondocks, wondering what the hell's going on. Sterling, well, it's got its own issues with Brexit, but it is slowly starting to move with that weak dollar. And you can see dollar CAD here completely discombobulating with the correlation with oil, down at 134.41. Now, that's still within recent ranges too. So for me, dollar CAD has just drifted back into the range. Now, if I give you a look at the longer term charts, this will give you a better idea. Now, all these charts here are longer term daily charts, right? You've got the euro breaking higher above that resistance line. That's a sort of a bullish move. Sterling, well, you can see how it's come off recently, but it's still in a massive range. Brexit dominating there. Now, this is where you get the Aussie and Kiwi. Now, the Aussie and the Kiwi will follow the Aussie today. See where the Aussie is bouncing, but until it gets above 71 cents, this thing is still in the downtrend. But if it gets above 70, you got to start thinking, well, that downtrend now is now coming back into a sideways moving market, and that's potentially what we have for the Kiwi. You probably want the Kiwi back up around 66.5 at least before it starts to trade sideways. Dollar yen, well, the next level on the downside is around 106. That's 200 points away or 300 points away. Sorry, 200. It is just cruising. There's no levels to get in down there. Dollar Swiss, we've got a nice break to the downside here. This is just developing that move. Dollar CAD, which has been cruising to the top side, as I said, it's really got to get down through 133 sort of 20 before it goes into a bearish sort of technical setup. The dollar index, as you can see, big move down, but still overall hasn't really come far, but it is breaking down on the hourlies. I mean, the real trend line here, it broke down through just above 97 was a resistance support line. So on those levels, you can see where, what is actually happening on a bigger picture. If I take you over to the yen crosses, now a lot of traders have been jumping in here. Now, the yen, right? So everyone's buying yen, this safe haven play. What you've got is a situation where some of these currencies are now reacting to the US dollar weakness alone, not just the safe haven trade that are going to blow these yen cross moves out. So you've got the Aussie back into the cloud. Kiwi yen, if you were playing that short, you're in trouble. Swiss yen also. You've got euro yen prodding to the top side. The only one that's really hanging down there is sterling yen, and that's probably because it's in all sorts of a mess. One, CAD yen. Well, it has rallied, but, with oil falling, you've got to expect that one to sort of keep coming off at some point. Depends what happens with the CAD. So across the board, it's not easy, right? It's not easy right now to work out where the action is because we've got so many convoluted events. So then you come back to look at, say, the Aussie dollar, looking at the overall situation today with the RBA. Now, I've had a number of traders sort of ask me, like, what the hell's going on? Isn't this thing going lower? We've got the RBA cutting rates today. Which, well, yeah, but that was factored in like a week ago, right? So the market is now caught up in the middle of no man's land. And what we have is this is a classic case of an absolute bloodbath. Here's the resistance level up here around 71.05. Now, where are we? We're at 69.74. This thing could seriously shoot to the top side. Now, when you're trading central bank events, if there's a potential change in interest rates, these things can become very good trading opportunities. But what we have today is a situation where the numerous geopolitical events combined with comments from one of the major Fed officials about potential rate cuts, this is going to open the door or Pandora's box for very low liquidity and very high volatility, especially around this RBA rate cut. I would suspect we will see a 50-point spread either side of the currency straight after it, after the rate cut. You get all the people out there who have got no idea what's going on, and they think, oh, they've just cut rates. We'll see it move lower. No, that's factored in, and you may see some sort of spike down, but the move will come from the statement. If they are not dovish, and I'm talking like we are cutting rates and we're going to need to cut rates again and again and again, yeah, that will see the Aussie come off. But the chance of that happening is very, very low. I suspect they'll go, we've cut rates. We're going to wait and see what happens from here. And what we'll see is we'll see the Aussie shoot to the top side up here somewhere. And that's because that's where all the risk is. Okay. Focus where the risk is in the market. The market's short. This thing's been going down for a couple of months. They're short on the expectation of a rate cut. Okay, we are going to get the rate cut, but are we going to get the followed up comments? I don't think so. And that's where the risk is. The whole market short, we'll see a big gapping move to the top side. And I just suspect we'll see 70.70. We may even see 71. Now, to me, that's a great level to be getting short Aussie, especially after a rate cut. It will depend on the statement, but just be aware this is going to be loose. Now, I've given you one side of the trading opportunity, right? If it's terribly dovish and worrisome, well, then it will come off. You'll probably see a bounce and then it come off again, right? So there's a number of different scenarios here. I'm thinking, in my opinion, a one-off cut and it shoots up here. So anyway, with that spectrum of expectation, there's going to be no liquidity in the market, right? So what happens is all the banks pull their liquidity, so the retail brokers don't have any pricing, right? It's very thin. So you'll see massive execution. If you're using pending orders around the central bank release today, you are asking for a massive dent in your account, right? Because regardless of what you do, you'll end up losing money, right? Now, the best thing to do is wait for about 30 seconds or a minute afterwards, have a look at their statement, see what the actual reaction was in the market, and then start to trade. All right, that's where you've got to sort of pace yourself. Now, and when you look at the whole situation, right? So this started with Trump, okay, putting tariffs on China. Now, the dollar yuan, sort of rallied immediately and shot to the top side. Check this here. This thing doesn't give a toss now. It's actually just trading sideways. The dollar index, this move here is on Fed Bollard's comments plus a break of that 97 sort of 55 on the dollar index. That's where the pain is in the market at the moment. So we are seeing a shift, but don't forget the whole shift is geopolitical, right? So you know what, we could be sitting here, and I'm sort of giving you the heads up here, or what could potentially happen. These things here are unpredictable and random. So it could change the technical picture straight away. But what we are going to see, if this continues, is low liquidity and high volatility around these major releases. Now, there's a bunch of releases coming out this week, but the key ones are central bank, okay, RBA, the ECB, and then we have the non-farm payrolls on Friday. So it's going to be pretty loose. Just keep an eye on these pairs at the top. So the safe haven trade, if there's any escalation, like Trump comes out and says, you know what, I'm going to nail Mexico, I'm going to nail China, and that has ramifications and flows on to the rest of the world. So global growth issues, concerns, you'd expect dollar Swiss and dollar yen to continue lower. The dollar index, well, that's going to be a little bit mixed, but you know, there's no chance of the Fed chairman Powell coming out and saying we're changing plans mid-meeting, right? He's actually pretty consistent. So Bullard maybe just putting the cat amongst the pigeons with those rate cut comments. But where the action's going to be, obviously today, especially in the Asian session, the RBA interest rate cut and statement, it's not going to be as easy as you think. Okay, the Aussie at the moment on the hourlies shooting to the top side. We've really got to wait and see what they say, and this will come down to sort of really setting the outlook, the fundamental outlook for the Aussie for the coming future. You think it's got to be negative, but will they signal further rate cuts? That's the big question. That's where the move will come from. All right, guys, plenty to play for. If anything, what I'm trying to highlight here is the lack of uncertainty around a lot of the trading at the moment. These moves, to me, are short-term, even though they've broken some major levels. We have to sort of see how this all plays out. It's getting a little bit tricky. All right, guys, have a good one. If you have any questions about those, about anything in this FX Market Insight, don't forget you can come into the FX 247 Trade Zone, and you can add some questions and work it out from there. All right, guys, we'll catch you later on. Cheerio.